Hey traders, this is MACDaddy Trader coming at you with another video. Today we're going to be talking about basically the results of the MACDaddy mean reversion trading strategy and just the strict trades that I've been looking at and where I'd like to see my entries. Um, but first, go ahead and hit that like button. Uh, Comment below, hit that notification bell, and subscribe so that way you can be one of the first people to watch these videos when I make them and post them. If you'd like to join the Discord to get any of these indicators and templates, just shoot me an email at macdaddytraderhelp@gmail.com and I will send you the Discord invite link. So basically, what we're trying to do here is get some confluence with these Ninjaringo bars. As previous videos have stated in this series, these are 18 and 3 Ninjaringo bars, and I have a ATR derivative of higher and higher time frames that produce these channels. So this is a 18 and 3 uh, 2.4 ATR channel using sky trend bands, and this would be a 5.4 ATR on a this would be the same derivative but on a 36 6 Ninjaringo chart. And then this one up here is a derivative of the 54-9 Ninjaringo chart, and they all are assimilated to a 2.7 on each of their respective charts, except for the 2.4 on the 18 and 3. This one's just a little smaller and tighter to keep in line with the price action movement on a smaller time frame. So, our current strategy involves waiting for price to hit these outer bands, which is correlatory to the uh, 54-9 Ninjaringo bars. So we wait till it hits, and then we try to look for a double bottom. And something like this right here, where price does not exceed the band, and then it hits again without exceeding the band, but still penetrating the band itself and being inside, and then it goes. So something like this, if we go here, we're trying to get a 2-to-1 reward risk ratio. We hit our long trade, we go bam. Uh, I have been testing 84 tick winners and uh, 42 tick losers. So we're trying to go somewhere right there. And we do this 42 right there, and it typically coincides with the bottom of the band, so you could have some wiggle room right here, some pullback. And the theory is like, hey, we're trying to get a 2-to-1. How frequent is that? And based upon the walk forward test, where we took the first legit trade of the opening uh, range, so essentially the first hour and a half or so, I'm in Central Time, so for me it's 8:30, and then I stop around 10 o'clock, which is 11 o'clock Eastern. So that's the time frame that I look at, and I try to get the first one of these I can. I also make sure that the first initial hit is not protruding past this band, because that negates the trade in my strict trade series. So something like that. That's what we're looking for, both on the bottom and the top. And just to give you some context for what I mean by protruding, let me show you a trade that would have been taken this time around with something like this. So basically, this was a trade where, hey, we could have taken something here, but we didn't, because we had a protrusion right below this band. Uh, Same thing here, no protrusion, but we broke the band, so any move up was negated at that time. Here we had no break, but we did have a break here, so this was negated prior to close. And this is the golden zone. So not only do we have a lock in of this 18 and 3 uh, equal to or less than this side of the 54.9 low, but we also have a line in the sand here where neither of these are protruding out. And so that's where we would take our hit and we'd take our entry, and then we try and get a 2-to-1, and we have our 42 tick stop loss with our 84 tick win right there. And as you can see, we do have some pullback, even a bar pullback, and that's just normal fluctuation for something like this. But that's what I really want you to notice here is when we have protrusions, we have uncertainty, and also we have high potential for a trend continuation, and that's pretty much what happens here. Yes, we have some push up, but ultimately we have a harder push down, and that's exemplified by this correction as well, going back down, and then we get 1, 2, 3 hits of this, and only these two are the ones that we care about, as evidenced by this hand-drawn line, and then we take and we go. And you can try and have a runner, anything like that. You could even take partial profits along the way. Anything like that is acceptable as long as it's within your risk reward and risk management templates. Not financial advice, but make sure you take a look and back test and forward test and mix things up, and just try to be as random as possible with what you're doing, so that way you're not getting in the habit of overfitting or over curve fitting anything that you're trying to do. Even step away, so that way your brain kind of forgets the patterns of what's going on, so that way you can go back into it and just be like, hey, this is what I'm looking for. If I don't see it, I won't take it. All right, so that's a great way to keep yourself out of trouble. Again, not financial advice, but just something to think about. And so it's things like this that I like to see. You could probably do this on other instruments, I would assume. We could even take a look at ES, something like this. Here's another one. It's obviously a longer one, and actually, let's take a bigger look at this, because I have a feeling, a sneaking suspicion, that this popped out over the top, and I think it did, because it's right there. Here, let me do this data series, and we're gonna center price. Yeah, there we go. Yep, popped out over. So that would not have been a legitimate trade. That popped out over. Not a legit trade. Okay. Now you can do those, but it's not something that I've found to be consistently reliable with. So you just want to ensure that what you're doing has some amount of consistency, because just doing something because it looks cool and you like it in the moment is just gambling. That's all it is. You have no basis for what you're doing, and you're just gambling. So that trade that we just saw was negated because that first initial hit protruded. Yeah, protrusion right there, and we touch this, but that wouldn't be a legit trade. Here, any of these are not legit because we don't have a full lock in these bars, or the 18 and 3, I would say, is inside. Yeah, so we see the 18 and 3, it locks into the 36.6, so they're both going in tandem together towards the 54.9. But when it actually goes, it stops. It stops right there. So none of these would be legit lock-ins because this band did not go into this at all um, until here. And then once that happens, we have a push, but the trade's negated right here. So see, when stuff like this happens, this is what I typically run into. So I don't like trying anything like this, even if we do have a small pullback and a push back towards the mean. That's not anything I'm interested in. There is some merit to doing um, double tops, double bottoms on the 36.6, but it's not as reliable over the long term as the 54.9. There's just a lot more rubber band effect on the 54.9 than there is on the 36.6, and definitely way more than the 18 and 3. So just keep that in mind when you're doing this. And again, if the if you're trying to go back to the mean and this goes beyond your threshold here, we don't take that trade, even though it looks nice on that one. Statistically, it doesn't happen as often. So here we wouldn't take anything because this poked out beyond the band threshold, and we just didn't get what we wanted, and ultimately it went below. So we're just looking. If y'all are interested, what I can do right now is we can look at ES, and we're going to change the bar size. We're going to change it to 6 and 1 because it meshes a little more appropriately with ES. So we're going to wait for it to respond, and I think we're good. So, okay, here's a great trade. Lost it. I want to try and find I think this is where we were. So, no go there. This could be a go, potentially. Right here. Well, this could be the second start for this one, and then you could try that. Let's see. Drawing tools. Long trade. Let's go for 24 ticks. Something like that. Let's go 28 ticks, because that's the third. That's a third of what we've been doing for NQ, and half of that is 14. So yeah, that would have been a loss, but if we do it again right here, check this out. Look at that. That was gravy. Okay. Now, obviously, I don't have the right time frames dialed in here. And the best so far, what I had for NQ is taking the first legitimate strict trade that presented itself during open, and maybe like an hour and a half after, or up until an hour and a half after open. So that's what we're looking for. Let's try that here today on whatever day this was. So we're going for 8:30, and then we'll go backwards. So 8:30. Okay. 27, 28. Okay, this is where we're looking. Protrusion, can't do it. Protrusion, can't do it. Protrusion, can't do it. Okay, we're looking. Okay, here we go. Protrusion, can't do it. We're looking. Okay, we're not locked in yet. We're locked in now, but we have a protrusion. Okay, still have a protrusion. Nothing yet. So we're giving up on all these trades because they're protrusions, and that's okay. Because what we want... Okay, so these we're not taking anything because we keep breaking the next high. So now this, we still have a protrusion. Okay, nothing yet. Okay, here we go. We are not locked in here because this is still below, so we're not taking this. Also, this is some weird stuff's going on here, and this will not be a valid trade because our 18 and 3 is not locked all the way in or above the 54.9 like it is here. It's locked completely in. So we have, right here we have a protrusion, so we're not taking that. Here we have a good setup. So let's see if we can get another one of these before we go down. And we do. So this would be a hit right here. We could take this entry. Granted, it's after 10, but this is the only one we have. So normally we wouldn't take this. But hey, maybe this would have been one of those times, right? And look at that. Okay. So let's go ahead and do our drawing tools. Let's look for a short. Let's say we go here. We'll leave it there for a second. Okay. We're looking for 28. Okay. And then we want 14 on this. Right there. Okay, so that's what we're looking for ES 6 and 1. Same principle. We're waiting until we have the optimal setup. And you had a great trend continuation back to the mean. So yes, this is a mean reversion, but when it keeps going, it kind of turns into a trend back to wherever it's going. So the markets are fractal, and a trend in one cycle is a reversion in another. So unless all the time frames you're looking at are aligned and all the way from half a millisecond to 10 years is on par, then I don't think you're going to hit every trend every time. So, but this is a great example of how you can apply this to ES on just make sure your bar size is adjusted accordingly to how you would trade. Obviously, I was outside my hours, so this wouldn't really count. But even if it was just by a fraction of a minute or so, I was a couple minutes out. But yeah, so anything like that, that's what we're looking for. Maybe, I don't know if this would be any good on stocks. I'll probably check that out on a different platform, make a video on that, because that would be something interesting to take note of. But yeah, ES, this can work on ES. Maybe silver, maybe gold, maybe crude, maybe the Russell. You probably just have to adjust your bar size and maybe tweak the settings on the ATRs. But that's what we're trying to do. Here's another start of a day, so we can try this one. here we go. So it popped up. These are all protrusions, but looky here. So we have a protrusion, but this one is not protruding. Also, the 18 and 3 is locked in or above. And these next ones, we could hit this or we could hit this. This would be the one that you would necessarily, or you would necessarily go for, and then you'd look to see your 2-to-1 ratio hit, and it does. It goes far beyond that. And so that's what I'm looking for every time. Just for the sake of showing you guys, let me go ahead and use some drawing tools. Let's do a short. So we're going here. That's what we're aiming for. This little guy needs to get with the program. There's 24 right there. And then, I'm sorry, 28's what we're looking for. 28 and 14. My bad, guys. So, right there. That's what we're trying to hit. And, slippage is going to happen. You could try and put limit orders in because there's a good chance that you're going to have a pullback. Just make sure your time, the number of bars in, is enough to get that pullback. Most of these will not run out on you because they do have some give and take along the way. They don't just blow through this like crazy. I have seen one, I think it was on Friday of this week, where it happened right at open and the execution was like in milliseconds. So that may not have been a viable trade, but this one is over a period of minutes. So it's something that you could work with and work towards. Again, this is outside the hours for this, but hey, maybe ES requires that in order to get these high probability trades, I need to have an extra 30 minutes added. So who knows? Maybe that's what the secret sauce is for ES. Just something to think about, something to test, something to randomize in your testing. See what works, see what doesn't, and it's up to you what you do with this. So thanks for watching. Don't forget to like, comment, subscribe, hit the notification bell. And if you want to get an invite to the Discord, just shoot me an email at MACDaddyTraderHelp@gmail.com and I can get that to you. All right, thanks for watching, and I'll see you next time.